Good morning. We will pay attention to manufacturing today. So if we look at the balances, they give us the finished goods stock, opening and closing balance, and they give us the work in progress opening balance. So this is the figure that will go in your production cost statement. The finished goods will go into your income statement. So that is your trading stock at the beginning of the year and the trading stock at the end of the year. Okay, raw materials is issued for production. Now remember, normally we will calculate the raw materials that was issued to the factory, taking the opening balance plus purchases less returns less the closing balance, and we determine what is this figure. Now in this question they gave us the raw materials, so we don't have to calculate the raw materials. Okay, if we look at the production wages, this is very important to read carefully what the information they're giving to you. This is the net wages. This is not the amount that we will record as expense. The net wages is the amount that the employees get when they go home, and that's the amount that they take with them. The gross wages is the actual expense for the business. So if we look at the gross wage, will be 100%. The deductions is 25%. So the net wage is 75% of the total amount. Okay, they give me the net wages, so this 75% equals 900,000. I need to know the gross wage, so the percentage that we want over the percentage that we know times the 900,000 will give me 1,2. Okay, so that means for direct labor, I will indicate the amount as 1,2 million. And then they also say the employers contribute 8% of the gross wage for to the pension fund or UIF or whatever. So the total contributions by the employer is 8%. So we must take the gross wage, the 1,2 million, and I must calculate 8% on that 1,2 million, and that will give me 96,000. So this is part of the expense that the business must pay to employ these people. So it means that I must add the 96,000 to the direct labor. And that will then give me 1,296,000. Now direct material and direct labor is the basic expenses that we have in a business. We can't produce anything if we don't have material and we don't have labor. So these two costs is my primary cost. So I will add up to see what is the total primary cost. Then the overhead costs we have to calculate. So we have three basic expenses: direct material, direct labor, and factory overheads. Okay, so if I look at the information that they give me here, they say the factory overheads was shown as 330,055. So it means that I will show here what the factory overheads was that we already allocated. There can then be adjustments to those figures. And the selling and distribution costs is 224,960, and the administration cost is 187,700 260. So I'm doing the income statement at the same time so that I don't waste time going backwards again to read through all the information that's provided. This will save you a lot of time in the exam. Okay, so the factory overheads goes in the production cost statement. Selling costs and admin goes into the income statement. Okay, the telephone account of 22,400 was posted in error to the factory overheads account. This expense relates to the office. So this expense is supposed to be part of the admin fee. So I'm going to take 22,400 out of my overheads. It's not supposed to be there. And I will add it to the administration fee to indicate that's part of that income statement expense. Okay, the entire amount of rent expense, 120,600, was posted to the factory overheads account. This expense should have been split in the ratio 5 to 2 to 3 between the factory and the sales and admin department. So 5 is factory, and 5 plus 2 plus 3 gives me 10. So 5/10 of the amount must go to the factory. The second one is sales. So sales will be 2/10, and distribution will be 3/10. Okay, and they say the 120,600. So times 120,600, so that we can see what is the total expense that's supposed to go to sales and distribution and admin. Okay, factory, sales, and admin. Okay, if I do this calculation, the actual amount that was supposed to be in the factory is 60,300. In the sales, we should take 24,120, and the admin 3/10, we should take 36,180. So it means that I must add to the sales department and I must add to the admin expenses. So I will show here that the sales must increase with 24,120, and then I will deduct that from overheads because the expense is not supposed to be under overheads. Then for the admin, the figure is 36,180. So I will add 36,180 and I will deduct that from factory overheads. The insurance expense is 26,390, was divided equally between the factory overheads and the sales department. The bookkeeper omitted to take into the account that the insurance was paid for 1 month in advance. So it means this 26,390 was not paid for 12 months. It was paid for 13 months. So we have to divide it by 13 and then multiply by 12 to see what the amount should be for the current year. And that will give me 24,360. So we recorded it as 26. It's only supposed to be 24. So if I deduct it from each other, it means I can work out what was the amount that was overcalculated and recorded in the production cost statement, and that is 2030. And that 2030 must then be divided between the two departments. And because we put in too much, it means that we have to deduct it from those two departments. So I will go to overheads, and in overheads I will show that I must subtract 1,015 Rand, and in the sales department I will also subtract 1,015 Rand to decrease it to the amount that it was supposed to be. Okay, then the next information is that the total sales for the year was 5,249,664. I can calculate the overheads now, and then I'm supposed to finish the manufacturing statement. But if we just add the overheads and we take the work in progress into account at the beginning of the year, it means that we will not be able to finish the full production cost statement. So I want you to look at the method that you have to use to get this information so that you will be able to finish it. Okay, so I've added the work in progress at the beginning of the year. They don't give me the work in progress at the end of the year. So normally I would put the work in progress in here and I would subtract it and work out what is the production cost expense. Because there's any of these figures unknown figures, it means that I can't do it just from adding from the top to the bottom. So I have to calculate this figure, and then if I've got this, I can subtract these two figures to work out what is the work in progress at the end of the year. They tell me that there's a markup of 60% on cost. So we will work out what is the cost price. So I will take the 5,249,664 and work out what is the cost, 100 over 160. And that will give me the total cost of sales. Now, when we did the periodic inventory system, we had to take our opening trading stock plus purchases less closing stock. We're not buying things now, we are manufacturing it. So instead of the normal manufacturing goods that we buy from other people, we make it and we call it finished goods. So you have to look at the finished goods at the beginning of the year and the finished goods at the end of the year. So my finished goods at the beginning of the year was 74,000, and at the end of the year it is 110,000. Okay, so the finished goods are exactly the same as the inventory that we purchase. Now normally I will take purchases and add it to the opening and subtract the closing goods. Now we're not buying it. So this figure that we calculated in the production cost statement is the one that we will record in our income statement. And that I will take the opening inventory plus this manufacturing cost, so this replaces the purchases because we're making it, and I will subtract the 110. Now in this case we don't know what is this figure. That's why we first have to calculate the cost of sales, and then I will take the cost of sales that I calculated the 74,000 opening inventory was not produced during the current year, so it means I must subtract that 74,000. The 110,000 that's not sold at the end of the year was produced during this year, so I will add it. So I take my total manufacturing costs, look at the opening inventory that we didn't manufacture this year, so I subtracted the 110 that's left over at the end of the year. I must add because it's part of the goods that we produced in the current year. And this will then give me 33,17040. Okay, the figure that I calculated here in the calculation for cost of sales is then actually your total production cost. So I can transfer this figure to the production cost statement, and if I've got that figure, I can subtract these two from each other and I can determine what is the work in progress at the end of the year. So if you have a problem with any of the figures in the manufacturing statement that was not given to you, then you will have to use this top part of the income statement, the trading section, to calculate the total production cost, and then you can work from the bottom to the top to calculate the figure that was not given to you. Okay, so this will be then 18,900 Rand. Okay, so this is a very big catch. They do this quite often. Sometimes they ask you to come do the whole income statement. In the majority of cases, they will just leave out some information that you need in the production cost statement to see if you realize that you have to use this calculation at the top part of the income statement to calculate this production cost. And then we will add all the sales expenses, and it gives me 248,056, and all my admin expenses is 246,340. So they don't ask you to do the full income statement with 20 different income and expenses. They call it a bridge income statement, so it's a shorter income statement, and all the expenses in connection with sales they will add together and put it as one expense in the income statement, and all the other expenses as admin expenses. Okay, these two are my expenses, so it means that I must subtract it, and the total expense then is 494,405. If I take the sales less the cost of sales, I can calculate the gross profit, and the gross profit is 1968624. If I take this gross profit and I subtract the other expenses, I can calculate my net profit for the year. Okay, so this is a very good example of leaving out some of the information that you need in the production cost statement to show you how you have to determine the figure that was not given to you.